Bitcoin. You hear about it all the time, right? Is it the future of money, or is it a complete environmental disaster? Honestly, it's one of the most polarizing technologies of our time. And at the very heart of the debate, you've got these two powerful, completely contradictory stories clashing. In this explainer, we're going to break down both sides of that argument. So you've got these two camps. In one corner, you hear people call it digital gold, a modern store of value, this resilient new asset for our digital age. And in the other corner, it gets branded as digital crude, an energy-guzzling environmental menace. So, which one is it? Well, to figure that out, we've got to dig into the evidence. And we're going to start with the biggest, toughest argument against Bitcoin. All right, let's dive right into the deep end, the digital crude argument. And look, this isn't just some catchy nickname people throw around. It's a really serious critique, and it's backed by some pretty alarming data about Bitcoin's impact on the environment. Yeah, and we're not just talking about opinions here. This is anchored in some serious research. There's this 2022 paper from the journal Scientific Reports, a top-tier publication, and they did a deep dive into the economic cost of Bitcoin's climate damage. So let's see what they actually found. Okay, first off, the sheer scale of the energy this thing uses is, well, it's staggering. Back in 2020, the Bitcoin network chewed through 75.4 terawatt hours of electricity. Now, that's just a big number, right? So to put that into perspective for you, that is more energy than the entire country of Austria used in that same year. Just let that sink in. But here's the thing, it's not just about how much energy it uses, it's about the environmental cost of that energy. The study found that between 2016 and 2021, on average, Bitcoin's climate damages were about 35% of its market price. Think about that. That puts it right up there with things like beef production and gasoline from crude oil. And it's a whole different league, like an order of magnitude higher than mining actual physical gold. And you know, at its peak, the numbers get even crazier. There was a point in May of 2020 where for every single dollar of Bitcoin value that was created, it was causing an estimated $1.56 in climate damages. Yeah, you heard that right. It was literally costing more to the planet than it was worth on the market. You know, the researchers themselves didn't mince words. They summed it all up perfectly. Their conclusion was blunt. When you look at it from a climate perspective, Bitcoin is a lot less like digital gold and a lot more like digital crude. I mean, that's a powerful, data-backed punch right there. Okay, so with an indictment like that, you'd think Bitcoin would just go away, right? But here's where the story gets really, really interesting. Because despite all of these heavy critiques, Bitcoin has proven to be this idea that just will not die. And that's the real question, isn't it? If that digital crude label really fits, if all these criticisms are valid, why does it keep going? How is it not just faded into the history books of bad ideas? Well, a huge part of the answer is just its unbelievable resilience. I mean, get this. According to trackers that count these things, Bitcoin has been publicly declared dead in news articles and obituaries 467 times. 467. And this timeline really tells the whole story, doesn't it? The first time someone wrote its obituary, it was worth 11 cents. In that crazy bubble year of 2017, it died 93 times in a single year. And the most recent death notice, it was written when the price was over $67,000. Again and again and again, predictions of its doom just get proven completely wrong. And look, this isn't just about a bunch of die-hard individual investors anymore. What's really changed is who owns it and who believes in it. The whole narrative has shifted. It's gone from this niche internet funny money to a recognized financial asset that's being held in the treasuries of major institutions. And the scale of this institutional money is just massive. I mean, take a look. As of 2025, you've got US-based Bitcoin ETFs holding over 821,000 Bitcoin. The software company MicroStrategy, they're sitting on almost 215,000. And get this, even the US government holds nearly 200,000 Bitcoin. These aren't just speculators, these are serious long-term stakeholders. So we've got these two completely opposite stories fighting it out. Digital crude versus digital gold. But the story doesn't stop there. Actually, the most fascinating part might be the challenge that comes not from the outside, but from deep inside Bitcoin's own design. It's like an internal test that's going to decide its whole future. Okay, to get this, we need to talk about something called the security budget. The easiest way to think about it is like the payroll for the network's security guards. It's the total amount of money paid to the miners for doing their job, processing all the transactions and keeping the network safe from attack. It's the economic engine that keeps the whole thing running, honestly. Right. And this budget, this payroll, it comes from two places. First, you have the block subsidy. That's a reward of brand new Bitcoin. But here's the catch. It gets cut in half every 4 years, programmatically. The second part is transaction fees, which people pay to use the network. And here is the huge critical problem. That subsidy is designed to eventually go to zero. And right now, fees, they make up less than 1% of what miners earn. You see the problem? There's this massive hole opening up in the security budget, and that poses a really serious long-term threat to the whole network. And this is what creates the risk of what some people call a death spiral. Imagine this. The price drops. Suddenly, miners aren't making as much money, so some of them just turn off their machines. When they do that, the network's total computing power, what we call the hash rate, it goes down. Think of the hash rate as the network's immune system. As it gets weaker, the network becomes more vulnerable to an attack. And what do you think that does? It scares investors, which can cause the price to drop even further. It's this potential negative feedback loop that's literally baked right into the code. But here's the thing. The Bitcoin world isn't just sitting around waiting for this potential disaster to happen. The community is totally aware of this long-term challenge, and now there's this whole new wave of innovation focused on solving this exact problem from the inside out. So what are they doing? Well, developers are busy building new layers, new protocols right on top of the original Bitcoin network. And the goal is pretty simple. Make the network more useful for more things. The idea is that if more people are using it for more stuff, you'll naturally create a healthy, thriving fee market that can pay for security forever. Okay, so a perfect example of this is a new protocol called Taproot Assets. And this is a potential game changer. Why? Because it lets people issue other assets, things like stablecoins, maybe even stocks or bonds, directly on the Bitcoin blockchain. I mean, this just massively blows up what you can do with Bitcoin. By plugging into the Lightning Network, it lets all these new assets fly around instantly and for super low fees. This creates just countless new reasons for people and companies to actually use the network. And all that activity, it generates those transaction fees, the very fees that are so crucial for Bitcoin's long-term security. And Taproot Assets is just one piece of the puzzle. It's part of a much bigger movement people are calling BTC-Fi. Think of it as this entire new financial ecosystem being built on top of Bitcoin, and it's all aimed at solving that same core problem, creating a robust, sustainable fee market. And this isn't some far-off theory. It's happening right now. The latest reports show there's already over $7 billion worth of Bitcoin being actively used in these new protocols, earning yield and directly contributing to the on-chain activity that the network needs to survive. So that's where things are today. The core rules of Bitcoin, the code, that's set in stone. But its story, that is clearly still being written. Is it this brilliant but ultimately flawed experiment, doomed by its own design to be digital crude? Or is it slowly and deliberately evolving into something much bigger, the secure foundation for a whole new digital economy? The answer to that question, well, that might just determine the future of money as we know it.